The Vancouver real estate market will be supercharged if these 25% tariffs are implemented on March 4th from the states. I'm going to be showing you the exact data and the reasoning behind it and why it's going to increase competition and price point not too long after these tariffs are implemented, if that is truly the case. I also have some other interesting news regarding of what other tariff schedules could be put into place here. We know that Donald Trump is a wild card and he's been slinging his fiery arrows up north to Canada for quite some time. I think he's definitely taking advantage of our fragility at the federal level in our political system, and he's using this as a way to negotiate and have Canadian taxpayers pay for his concessions like tighter border control and other things so that the US taxpayers don't have to do it, as well as try to renegotiate and sign better trade deals for the US as well. We already know he pushed back those tariffs a month, but now with what has been released, it seems as if on March 4th we are going to see those tariffs implemented. In Vancouver, we know also with some of this data that I'm going to show you, we are not that affected as opposed to many other cities across Canada. We're very lucky here on the West Coast, and that is one of the reasons why I think it's not going to have a big of issue here, and that is actually going to increase a pricing in the real estate market as well. So we're going to go through some data to show you exactly the parts of the country that are going to be most affected, as well as some other schedules of what potential tariffs could be if Trump pulls another audible. I'm going to bring up some data here from Edge Analytics. So thank you for the data here. And they put forward some findings here of what a more realistic tariff approach is other than that 25%. And as I pull up the data here, you're going to see that two people in Trump's administration, Scott Bessent and Howard Lutnick, strongly hinted that there would be two rounds of tariffs, the first being temporary threat tariffs aimed to get U.S. border partners on board with national security concerns, i.e. the flow of fentanyl and illegal immigrants, which would not be permanent tariffs, and the other being more permanent, lower tariffs likely implemented late spring and rolled out in stages. So if you see that and you see that's being echoed, to me that's a lot more reasonable of an expectation. The whole 25% is very, very aggressive. Could it happen? Yes, because Trump is unpredictable. But as you read between the lines and see what other people within his administration are talking about, this is something that seems a little bit more realistic. But this video specifically is what would the outcomes be of a full 25% tariff implementation on March 4th. The next chart I'm going to bring up here is the expected Bank of Canada policy rate path, and why this is important to understand and why this plays a pivotal role on what can happen in the real estate market across Canada and specifically Vancouver is the Bank of Canada's relationship with what they need to do with the tariffs. Right now, you can see that in the blue is the expected BOC policy rate path. We now think, or many commentators predict, that it's going to drop another 0.5% over the course of 2025 if nothing else happens to have that policy rate stop at 2.5%. The experts and commentators here from Edge Analytics believe that there's going to be a little bit more of a drop down to 2% by July of 2025, and that right now you can see in terms of what commentators are predicting, 2/3 are thinking that we are going to have another rate cut in March, but there's a good chance that it could be paused, but this could all be thrown away if those tariffs do come into implementation on March 4th. Before I dissect a little bit further the Bank of Canada's relationship with these possible tariffs that are going to be implemented next month, I wanted to bring you a chart here from businessdatalab.ca, and it shows the vulnerability index for Canadian cities. So right here it states the table below provides our US tariff exposure rankings for the 41 Canadian cities. The index simply sums a location's excess US trade intensity and its excess US export dependent, both in percentage points relative to the national average. Here's an overview of some key markets to watch. So right here you can see right off the top, New Brunswick, St. John, 131.1% tariff exposure index. Alberta, Ontario, Quebec, Alberta, a lot of these back east are near the top, and that's obviously because of the type of manufacturing that goes on back east. The auto industry, steel, aluminum, all these sort of things are implanted a lot back east. Alberta is going to be high on the list on some of these because of their oil, but Vancouver specifically, a lot of the jobs here and how our economy is run isn't based on a lot of where these tariffs are going to be focused in on, and that's why we are not going to see the brunt of it, and why you see Vancouver sitting at number 32 32 out of 41 with a ranking of minus 14.9% tariff exposure index. We are lucky to be living here in Vancouver, not to be affected as much as some of these other cities and other provinces such as Alberta and back east, but there's going to be other consequences that are going to fall in line. And I think the biggest consequence with this, or one of that's going to have the furthest reach, is going to be real estate pricing here in Vancouver. And why do you say that? As we dig into a little bit deeper as to why Vancouver is not going to be as affected as other cities, here are some more data points here from businessdatalab.ca, and it really lays out the goods exports from Vancouver to the US and ranks us in Canadian cities. So in terms of overall volume, we rank 6 out of 41 cities. And then when we talk about per capita, $5,144 per capita ranks 26 out of 41 cities. Total exports, 72.1%. We rank 31 of 41 cities. Percentage of GDP, 8.5%, 27 out of 41 cities. And then when we look at our population, when we see that our population is just under 3 million, which ranks 3rd out of 41 cities, but we're sitting overall 32 out of 41 when it comes to the exposure limit, is just because of how our city and our business within our city of Vancouver is really set up. So let's dive into the reasons why the Bank of Canada is going to be involved with these potential 25% tariffs, and that is to help stimulate the economy. Obviously, if these 25% tariffs are going to be implemented, it is going to crush the auto industry, it's going to crush the oil industry, and hundreds of thousands of jobs could be lost, felt mostly back east. So if people are losing their job, pricing is going to go up for certain items across the board as well. The only way for Canada to kind of divert that and to help stimulate our economy is to reduce these rates very quickly. And there was already an article, and I'm going to pull it up here. As I bring up this article from the Financial Post, this was on February 3rd, 2025, right before the first round of these potential tariffs were to be implemented. So this lays out the bets rise for an emergency rate cut by the Bank of Canada. Traders of Canadian short-term interest rates have begun to price in meaningful odds of an emergency cut to help stimulate the economy. The article ends saying economists predict a tariff war would put the Canadian economy into a recession. U.S. President Donald Trump's 25% tariffs on most goods from Canada and retaliatory actions by Canadian Prime Minister Justin Trudeau will trim real gross domestic product growth by 2 to 4 percentage points, they estimate. So we already have these commentators talking about emergency cuts. Those haven't needed to be happening because those tariffs weren't put into place. But now, as we fast forward, this is article here talking about the Bank of Canada seen under pressure to keep cutting interest rates. This is on February 4th, 2025. And this is right here is another graph just about where the Bank of Canada overnight interest rate is here. But I've highlighted here where it says the bank will likely cut rates to the bottom end of its neutral range of 2.25% over the coming year on a base case alone. He adds that any significant increase in cross-border tariffs could force the policy rate to 1.5% or lower. And this is exactly my case as to why, if these tariffs are implemented, why it's going to supercharge the Vancouver real estate market. We already know that back in November, early December, the market really started to change. There was a lot more transacting that was happening. I know with myself, I've had one of the hottest starts in my real estate career. Both buyers and sellers are willing to come to the table. And obviously, it's a pendulum. As we've seen a reprieval on these interest rates, it's been bringing more buyers to the market because they can have more money for lending to purchase, and sellers are feeling a little bit more comfortable now in terms of where they're wanting to go. We've had some more inventory that's shot up, so there's giving some more selection to sellers and buyers as well. But if you think of where we're at right now at a 3% policy rate, and now we're talking about how rates would have to drop to 1.5% or lower, we're talking about another 1.5% drop in interest rates. Buyers are going to be salivating at that opportunity. Remember, on these variable rates, for every $100,000 of lending and every quarter point drop, you're saving $15. So if it drops to 1.5%, another 1.5% in terms of mortgage lending rates, you are now saving $150 for every $100,000 at lending. And that's where things really start to compound. We already see how low these rates have started to drop over the course of the last 8 months or so. And if you add more fuel to the fire, and there's a lot of buyers willing to transact, and now you're looking at upwards of saving another $150 per $100,000 of lending, that is going to make a big difference in the market here in Vancouver. Yes, I know January has proven to have a big uptick in inventory, but I know, speaking for myself as well as many other colleagues, our pipelines are very, very full. We have lots of buyers who are willing to transact, and every time these rates drop, more buyers are coming into the marketplace. And if here in Vancouver our our risk level for these tariffs are amongst the lowest in the country, and there's not going to be mass amounts of layoffs with jobs and things of that nature. If people are keeping their jobs, money is getting cheaper. Obviously, that's going to have a negative effect depending on what your viewpoint is on the real estate market. It's going to be more competitive. It's going to bring pricing up, but it's not going to happen overnight. These rate cuts are going to take some time before they're implemented, but if the Bank of Canada is signaling that they're going to do it, it's going to be on the radar of buyers' minds. Everyone knows what their lending levels are, and if people are just waiting for that little bit of a pickup in terms of their lending to get into the market, this is something that could spark that excitement. Right now, especially if you are wanting to be proactive, especially in the detached space, both on Vancouver's west side and east side, buyer market conditions, if you are wanting to really take the next step and you are looking at what the landscape is, especially on March 4th, if those tariffs are coming in, the real estate market isn't going to have those pricings change overnight, but there's probably going to be 4 to 6 weeks where the market is going to stay as is. There's going to be soft pockets, and if we know that these rates are going to drop and you can lock something in before the competitiveness happens, and you can lock into a good value buy before the competition comes in, not only could you start seeing some appreciation over the next year or so, but your rates, if you're going on the variable rate, your mortgage is going to continue to get significantly cheaper as well. So if you're looking on a detached property, the average detached property is around $1.8 million. If you're having a $1.4, $1.3 million mortgage on the variable side of things, you're having some significant relief on your monthly mortgage. So these are some items here as to why I think if these 25% tariffs do get implemented, why it's going to have an effect on the Vancouver real estate market. My name is Kyle Mark, your Vancouver realtor, and whether you're looking to buy, sell, invest, or relocate to my beautiful city of Vancouver, make sure you book a discovery call with me. All my information is in the description below. I'm super easy to get a hold of, and I am here to help. So until the next one, take care.